Hi everyone, welcome to this review of the first quarter of 2023. We are going to spend the next couple of minutes to recap what has happened in the markets and the portfolio during the first quarter, and we will also have a look at what is ahead. This time the session is pre-recorded, so the one thing we need to handle a little bit differently are questions at the end of the presentation. No need to make this complicated. You know that I'm quite active on eToro, so any questions you might have after watching this and after looking at the presentation, please feel free to post those questions, preferably in the comments on eToro. That way, other people interested in the portfolio can also easily follow the discussion and engage if they like. For those who have only recently discovered my profile, I launched this portfolio almost 3 years ago in August 2020. Around 2 years ago, I joined the Popular Investor Program, and I am happy to see that since then, the portfolio has indeed been quite popular. So as of today, there are well over 6,000 people copying my trades and over 150,000 people following. I like to keep the strategy simple, so I only invest in stocks, I do not short, and I do not apply any leverage. When buying stocks, I consider price very important, so that puts me into the classic value category. Nothing wrong with growth stocks, but they have to come at the right price. The goal is to outperform the major indices in Europe and America. By default, I compare portfolio performance to the S&P 500, which is widely considered as the best proxy for the market and has in fact outperformed most global indices in the past. So since beating the index is the declared goal and the portfolio has been live for a couple of years now, the logical next question is, how is it going? To that, I would say, so far so good, and you can see why on this chart here. This is the performance of the portfolio from its day one in August 2020 until the end of March 2023. And the difference to the S&P 500 is quite staggering. The S&P has delivered around 25% in that time frame, while the portfolio is up around 75%. That corresponds to yearly growth of 8.9% on the S&P and 23.5% on my portfolio, which is a significant difference. Also, those returns in my portfolio have been rather consistent. Of course, there are always some bumps in the road. You simply can't escape market volatility sometimes. But the important thing is that the portfolio has gone up consistently over time. That is exactly what I want to see from my strategy, which is designed to provide a well-diversified mix of fundamentally solid companies. Now, zooming in a little more into the most recent past, this graph here shows the period of January until March 2023. The portfolio finished the quarter with plus 9.1%, while the S&P delivered plus 7%. If you are following the markets, you might remember that in January, investors were quite optimistic. There was a general feeling of, okay, interest rates are already high, there can't be that much more in the pipeline, and inflation will probably ease during the year. Also, there were great hopes placed on China's reopening after they abandoned COVID-0 policies. That attitude took a bit of a hit in February when people realized that we are still a long way from inflation coming down to 2%, which is the goal of most central banks. And of course, in March, problems in the US banking sector emerged. And that led, among others, to the failure of Silicon Valley Bank in the US. And in Europe, UBS was basically forced to absorb Credit Suisse to avoid Credit Suisse from failing. That crisis eased off a little towards the end of the quarter, which turned out to be overall positive for many investors. And that positive performance was also the case for the portfolio. The strongest contribution came from Coinbase, which benefited from a rally in crypto during the first quarter. I used the opportunity to close the remainder of the Coinbase position. In total, the position has increased by around 33% during the time it was in the portfolio. So I am, of course, happy to see that positive contribution to the overall result. Two other stocks that had a strong positive contribution to the portfolio are Lufthansa and Signet Jewelers. Lufthansa has reported strong earnings recently, benefiting from still high travel demand and from somewhat constrained capacity, which helps them to keep prices high and earn higher margins. Signet has recently pushed into the online jewelry market, which I believe is a smart step. Furthermore, the company is generally on a solid financial footing. So for both positions, Lufthansa and Signet, I expect further upside, and therefore they remain in the portfolio. The bottom performers, the ones you see here, Harley-Davidson, Signify, and K&S, they did not participate in the general optimism to the same degree, but they still did perform okay, so no need to worry about them too much. The bigger question is probably if the strong first quarter will carry over into the full year. And that is indeed something where a little doubt is appropriate. Here on this slide are the main challenges which I identified coming into 2023. Inflation and interest rates are still the main challenge now that we are in the second quarter. The one thing I did add was banks on the right. After the turmoil in March, this is clearly something to watch. And those three things are also very tightly connected. As you know, in many parts of the world, inflation is still high compared to what we are used to. Central banks do what they have to do, and that is increasing interest rates. And that has now shown to be an issue for banks, who have mostly relied on the assumption that interest rates will stay very long for a very long time. So clearly these three things, inflation, interest rates, and problems at the banks, are things which have a major impact on the world economy. And that is still the big fear out there, that we will face a downturn in large parts of the global economy because of the interconnection of those issues. If you look at forecasts, they are indeed somewhat negative. So we heard a lot of things, for example, from the International Monetary Fund recently. They were talking about a rocky recovery. And if you just follow the financial media, there is constant talk of hard landing, soft landing. Is there going to be a big recession or just a mild recession? So all these forecasts are out there and they are all pointing towards the rather negative side, and they only vary in the degree of how negative they are. So nobody is out there and saying, okay, there is a new bull market just around the corner. So that is, of course, understandable looking at the big picture, because there are indeed some uncertainties out there. The general view is, however, that things will stabilize. Yes, the recession fears are there, but there are reasons to believe that inflation is coming down from the historic levels we have seen last year. Accordingly, interest rates might be approaching their peak, and that relieves the pressure on the financial system. It also gives companies and consumers a more steady outlook, which is necessary for investment decisions, both within companies and within households. So I believe that the current challenges will get resolved over time, and they will no doubt be replaced by new ones. The important thing is to have a sound and consistent strategy when investing. And that strategy should not have to rely on constantly guessing the direction of the market next month or next quarter. Lots of things can happen in the short term. If you look more medium and more long term, the world will most likely work through all of this. So as always, I continue to believe that having a long-term view on your investments is best. And on that note, I think it is also good to leave it for today. I hope this gave you a good recap of what happened in the markets in Q1, how the portfolio performed, and what I think about the months ahead. I will continue to keep you updated, so definitely stay tuned. Thank you for watching, and if you have comments, questions, suggestions, please let me know in the comments, preferably in my feed on eToro. See you next time.